Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor. I own my own advisory firm, in fact. But this video is not financial advice. In this video, we're going to talk about whether GameStop has hit the low. Is the low already in as of post Q3 numbers, pre Q4 numbers, and talk a little bit of the stocks and pressure building. Hopefully you learned something in this video. If you do, would appreciate a sub. We're trying to scale Mount Fuji. If you want to be a part of the Pokey Sub Club, anytime between now and 3776 subs, you can be a part of the Pokey Sub Club. Also, thank you to those who have joined the channel as fans and friends. Let's talk the stock real quick because the past week, GME up 3.35%, the S&P 500 down 1.26%. Year to date, what do we have here? GameStop up a little over 20%. Year to date, the SPY down 2.08%. So you gotta love the time and pressure building, the negative beta play coming back online, the high floor fundamentally of the business coming back online. Very exciting times um, to be a GME investor, in my opinion. So I want to adjust these post Q3 numbers to give us a reflection because post Q2, I decided to lock in basically what was the low. And did the low reach what I describe as the fundamental floor? Because the fundamental floor after Q3 numbers came in rose substantially. And the reason is that trailing 12-month operating income rose substantially. So after Q2 earnings, trailing 12-month operating income was $102 million, which after Q3 earnings, that rose to 177. I gave it a fundamental floor PE of 20, which would imply a fundamental floor share price of 1941. So post Q2, we did touch a share price of 1994. And so the question is, what was the deep low in this past quarter? And is that lower or higher? Right? So post Q3 numbers, this 1994, there you go, on November 20th was the lowest point, the lowest close at any point after GameStop's earnings reported in late September. I think it was. If that's right, it doesn't really matter. Post earnings, post Q3 earnings reported early December, we hit 20.08. So if we adjust all of these numbers to reflect the enterprise value at 20.08, well, what is 20.08 times 447 million? An $8.976 billion enterprise? 8976. Wow. Okay. So, well, it's really 8975.76 was approximately the enterprise value at the point of this deep low. So the whole point of this little part of my projections tab is to illustrate the floor, right? Low after Q3 earnings, which was on January, oh, December 31st. Great. December 31. We hit collectively an $8.976 billion market cap, which is higher than the 8.923 market cap that we hit after Q2. However, enterprise value actually did come down by about 20 million, basically flat though, which is good. It means you're seeing stability in the floor valuation at a 20.08 share price. That gives you, based on 177 million of trailing 12 operating income, that implies that we touched a 21.66 PE ratio. I described the fundamental floor as a 20 PE, which would have given you a 1941 floor share price, which is substantially higher than the 1545 that hypothetically the stock could have been trading at just 3 months earlier. Now, it didn't even get close to 1545. It approached 1941, but it didn't touch the 19s, right? That's what, 14 cents per share higher. So was the 1994, is that basically the all-time low? Is that the forward-looking, will we ever touch that again? On a single day, who knows? But will we ever trade there sustainably, right? Could we in a day trade at $18 a share? Sure, but what I'm generally proposing is that we can't stay at 18 a share. We can't just spend a whole quarter trading at 18 a share because it becomes too attractive of a buying opportunity, right? Ultimately, GameStop does not exist in a vacuum. Other people can see what's happening with the company, and if it's priced too low for too long, money will pour in. If you adjust for US and Australia, then that would have given you at a 20 PE a deep low of 22. So I think it's fair to say that the netting out of France and Canada does not really support the stock from a fundamental low perspective. Although, pretty quickly after this dip, which lasted about a month long, like we spent about 1 month of this quarter, right? The quarter post Q3 earnings, but before Q4 earnings, we spent about 1 month below 22, but the other 2 months of it above 22. So is that somewhat of a still valuable indicator? Sure. But ultimately, when you're thinking about trailing 12-month income, most people are not netting out the one-time portions of the business. And so perhaps this floor is a little bit too aggressive of a floor. However, ultimately, GameStop is selling out France and Canada. And so eventually, these numbers will be these numbers, right? Whatever amount that France and Canada are weighing on operating income, that is improvement that is baked into and inevitable for the coming quarters. So the question's kind of, this the the PE. So on an enterprise value basis, we actually the floor got about $20 million lower. But look at the PE, right? At the low, the deep low following Q2, right? This whole period here, the deep low at 1994, which is just November 20th, just a couple months ago, on a PE basis, that got you to a 37.72 PE. This deep low here got you to a 21.6 PE. I don't know if this is really going to carry through on the video, but that is a great illustration of just how quickly the fundamental floor of GameStop is rising and coming up to and pushing up on the share price down to a 21.6. That's just incredible. And if you're netting out Canada and France, right, the one-time operating losses, it got down to a 16 PE. That's just incredible. Even if you just bought the Friday after earnings, right, you were looking at an 18 PE. And again, that's assuming that you're valuing the 4.2 billion in convertibles as debt. That's assuming you're netting out all of that cash. If you assume that that will ultimately dilute, even when you factor in the dilution, right? You take into effect the rising share count. You take into effect the market cap. If you price in that dilution, then you touched a 13.18 PE post Q3. So the question is really like, is that the floor, right? What happens in Q4? Well, I think on a dollar per share basis, the floor probably is in. But on a PE basis, we might see an even deeper value depending on just how much this trailing 12-month operating income grows. So right now, if trailing 12-month comes in at 250, which I think might be a little high, right? Let's play with this for a minute and think for a little bit longer on is the floor in and what does that mean? Operating income of 80 million. There was only 1 million of asset impairment against that, so not a lot of one-time losses. Generally speaking, top line is probably going to come down, right? The 3.8 billion in full year 2025, if we were going to beat that in in 2024, the 3.8, if we were going to beat that this year, then you're needing to beat Q4. I mean, through 3 quarters, 2.5 billion, 2.5 billion. However, we had a huge beat in Q2 from the Switch launch. Does that carry over into a huge beat in Q4 or not? Who knows? If we beat top line, it will be narrowly. That's for sure. However, gross profit will be higher if we're even in the same ballpark from a top line perspective, because margins are almost certainly improving, which is incredibly impressive given that we do have the Switch 2 launch. But Q3 last year, you saw a 29.9% gross margin. It's up to 33.3 in Q3 of this year, right? A 27% in Q1 of last year, 34.5% in Q1 of this year. A little bit of a dip in Q2 because of just how insanely many Switch 2 consoles were sold. But all that to say, Q1, Q2, Q3, that's this gross profit number, improvement by 8 million, improvement by 35 million, right? Yep. An improvement by about 16 million. So what's the gross profit improvement? I mean, conservatively, you could call it 10 million. Aggressively, you could call it 15 or 20. I guess aggressively, you could call it 40 if you really want to be aggressive, which collectibles have a higher profit and man, that's just, if they did this, geez, if they did 1,200 in sales, and they got a 32% margin, they would be at 384, which would be a $21 million improvement. I mean, 20 is a decent ballpark number of improvement as far as gross profit. So there's 20 million. And then the other big X factor is SG&A. I'm going to say that the asset impairments is a non-factor. I'm going to say there's going to be 1 million in impairments in Q4 as well. Maybe it'll be more, maybe it'll be less. SG&A though, Q3 to Q3, you're looking at 28, 282, all the way down to 221. 282. I mean, let's just look at the non-store, or sorry, the store related, because I think the non-store related has basically bottomed out already and is starting to slightly grow due to power packs, which I'm not going to get into in this video. But store related, boom, $60 million drop year over year. Q2 related, $52 million drop. Q3, another $60 million drop. I mean, that's 60, 50, 60 store related SG&A. So if conservatively you call it 50, right, let's just go on the lower end of what it's been every quarter so far year over year. Well, let's just see how much of that. Oh, they don't break it out from last year to this year or from 2023 to 2024. Let's call it let's just call it 50 for the sake of this video, but maybe it'll be closer to 40. 50 million improvement in SG&A by a decrease, 20 million improvement in gross profit. You put those together, that's a $70 million improvement to operating income, aka something like a $150 million operating income in Q4, which is crazy. So what does that do from a trailing 12-month perspective? Well, I have this. How much more is 250 from 177? Great, a $73 million improvement. Let's bring it down to 240. Let's say it's only 63 million improvement year over year. I'd say that's pretty conservative based on the numbers we just went over. If this number goes from 177 to 240, what happens to the valuation? Well, right now, right, this is based on the deep low, right? The PE at 21.6 was based on an $8.9 billion market cap based on the deep low at 20.08. We are already 20% higher than that right now. So the stock is already 20% above the low that it tested after Q3. How low could it test after Q4? Man, I mean, if we lock in, this will be, I know this is all probably pretty hard for you to see, but this will lock in the fourth year in a row of improving margins, one, two, three, and then four in 2025. This will lock in the fourth year in a row of SG&A improvement, right? Declining costs. This will lock in the fourth year in a row of improving operating income, the fourth year in a row of net income, and an inversion to net sales per store. So sales per store has been coming down this whole time, but it is going to be blown out of the water in 2025 right? It's on pace in 2025 to exceed any of these years, right? It's going to be closer to 1.6 or something like that. $1.6 million in sales per store, which is higher than ever. Look at that. It's higher than ever. Well, at least since pre-2018, right? That's incredible. So not only do we see the fourth year in a row of all of the improvements to the balance sheet and income statement, but you also see the sales per store, right? So if the top line is even in the same ballpark as it was last year, while simultaneously we have 1,000 fewer stores than we did last year, that's incredibly bullish. I mean, geez. So to call 21 the floor PE, I mean, if you want to still say that the floor PE is 20, fine. But if you start putting it in the teens, when every other discount retailer, which GameStop is a full price retailer for its new stuff, but is a discount retailer for its resale business, which is a large portion of its business. Regardless, 4 years in a row and still going of improvements across the board, that you should pay a PE premium for those financials, but then you're netting that against a PE expense, a PE loss related to a downward pressure related to the fact that ultimately GameStop is a brick and mortar retailer. So you're paying a price in valuation for that reality, but then you're getting a boost for the reality that GameStop is executing really well. So what does the floor share price become? Or what is the floor share price at a 20 PE is $23 a share. The floor share price went up $4 per share over just a single quarter's earnings. And it pushed the floor right up to where the deep low hit. The deep low at post Q2 didn't even get close to fundamentally how low you could have argued that GameStop should be valued, right? The PE only touched a 37 at the lowest point. That was almost cut in half just one quarter later. And even now, right now at 24.34 per share, GameStop's PE is almost as low as it was at the lowest point post Q3. All right, at the lowest point post Q3, GameStop hit 21.66 on a PE. Right now, 20% higher, right? The enterprise value is almost $2 billion higher, and yet the PE is just 5% higher or whatever, 8%. Because the floor is rising. The fundamental floor is rising as these numbers come in. And when you think about US and Australia, woo, you net out the Canada and France losses related to this trailing 12 months, all of a sudden, the floor becomes 25.47. So I know we are used to, hey, GameStop, it's going to go up leading into earnings, and then after earnings, it's going to get slammed, right? That's just what happens all the time. Earnings comes, then it gets slammed. Hype comes pre-earnings, etc. The problem with um, that historical trend putting you to sleep is that a couple earnings ago, this $240 million of trailing 12-month operating income was zero. right? A couple quarters ago, they didn't have any PE because they didn't have any E. Q1 was the first time, right? This past June, 9 months ago, was the first time in the Cohen era that GameStop has even had an E, a trailing 12-month operating income. They didn't have earnings. And now look what's happened to the valuation of this stock over just a few months period of time. And we're about to see another quarter lock in and have the lows already hit. I think on a share price perspective, they have. The reality is, after Q2, we hit 1994. We didn't get that low again. We didn't. You can scoff at 16 cents per share, fine. The reality is we needed one more quarter for the fundamentals to fully catch up to the market cap. The fundamentals weren't there yet after Q2. It could have been much lower than 1994, hypothetically. But the problem is GME doesn't exist in a vacuum. A lot of wealth around the world would be buying in aggressively if you had brought it to those types of deep lows. Now the deep lows are where we are. Now the deep lows are where we are. There's such incredible value to such a limited downside related to GameStop's execution. And by the way, what if you call this the floor PE of 21? And what if you say it's going to do 255? So a $78 million improvement rather than a $63 million improvement. Well, if you do that, then the floor price is where we are. 24.15 a share becomes the hypothetical floor, which would be again another slight contraction to PE, right? The PE now would actually be even lower. Now, assuming this is the number. So it's not quite now yet because the numbers haven't been reported yet. But if the numbers get reported, this is the number of trailing 12-month operating income. And GameStop is trading at 24.34 share. Well, guess what? At 24.34 share, GameStop becomes a deeper value buy than it was just 2 months ago at 20 a share. At $24 a share, GameStop is a deeper buy, right? It has a lower PE. It's valued even more conservatively than 2 months ago at 20 a share. Again, I don't know if this really will come through, but this is an incredible way to describe the value that is GME right now. And again, if you net out the one-time losses related to France and Canada, I'm calling them one-time losses because they're not moving forward a part of GameStop's business, then that floor share price is actually 10% higher than we are right now. It's pretty incredible. Pretty incredible. So all that to say, does this PE come down at the low post earnings? Well, if post earnings the low is $24, then yes, we will see the low be a slight contraction on a PE basis, right? If the low is $24, right where we are right now, 24.34 a share, then the PE is still contracting slightly. But 24 is a lot higher than 20, isn't it? You know? And what if we get down to 20, right? If this becomes a $9 million market cap again, look what happens. Boom. Holy smokes. So if post Q4 earnings, GameStop, it crashes closer to 20 a share again, then that would imply that their PE collapses all the way to 14 and that the US Australia PE collapses all the way to 11. And again, these are both assuming that the 4.2 billion in convertibles are being completely netted out. Zero dilutive effect, which if you assume they do dilute, and that basically decreases your PE by another 30%, right? So if you assume that the convertibles will convert, right, that in 7 years, GameStop will be worth at least 30 a share, which they'll have about 30 a share worth in cash by then, if they just do what they're doing, then the effective PE is really more like 9. And then if you net out Australia, more like 7. If at if GameStop goes down to about 20 a share. So again, I don't know if this will carry through, but this is a third way to illustrate the fundamental floor rising and the deep value play that GME really is. Because if they crash GME post earnings, if they crash GME to 20, and on your ticker, you're seeing that this thing, after 4 straight years of improvements across the board and an inverted top line trend, right? Even if top line technically year over year ends up slightly lower than the year before, slightly lower would imply incredible improvement on a sales per store basis, which would imply that the future is bright, right? It means that the bleeding has stopped. Think about 2023 to 2024. This is a $1.5 billion decline year over year in top line. Another $700 million decline in top line 2022 to 2023. Another $100 million decline the year before that. You know what I mean? So if GameStop reports a tiny decline, right, instead of at 3.8, they're at 3.6. Okay, fine, but with 1,000 fewer stores, right? Maybe 1,100 or 1,200 fewer stores, all of a sudden, the implications of 3.6 are pretty stinking good. But regardless, if they crash it to 20 and GME's sitting at a 13 PE, a 13 PE that doesn't value any acquisition, right? Asset management business is not even online. There's no asset management business. A 13 PE with just the cash being valued at cash. No premium at all. No deployment. No news. No power packs. Power packs not included in the numbers whatsoever as it relates to GameStop's reported sales. Still completely held off balance sheet, but by the way, probably doing some pretty insane numbers, right? Just kind of wild. At 13 a share, do you think that some money around the world, at 13 PE, do you think that some money around the world would say, yeah, I'm gonna go ahead and take a bigger bite? I think so. That's what happens. If they crash GameStop to 20, this is what the PE is gonna look like. Which again, they crashed it to 20 a couple months ago, and that brought the PE to 22. We're talking about a 13. They crashed the price to 20 a couple months before that. That brought the PE to 38. That was the deep value buy November 20th. Today's March 7th. February, January, December, plus 2 weeks. 3.5 months ago, the deep low, the deep buy was a 38 PE. If they crash it to 20 again, the deep buy will be 33% of that, right? The deep buy from 3 months ago will be 3 times more expensive than the deep buy that could be available in 3 weeks if they crash it to 20. What does that mean to me? It means it's probably not going to crash to 20, right? 20 all of a sudden becomes too deep of a value. It becomes too deep of a value. And where does that value threshold rise to? $24 a share. Jeez Louise. Jeez Louise. So, is the low in? Well, we didn't touch 1994 after Q3. So maybe the low's already been in. But I don't think we touched 2008 after Q4. Regardless of the Bitcoin loss, regardless of what happens on the top line number, right? If it's still a decline year over year, I don't think we touched 2008. Do we get lower than a 2166 PE? I think we do. So what does that mean? Is the new low, does it touch 21 for a couple days? Does it touch 22 and that's as low as it gets? I think that's totally in play. But again, even this number, that 2008, it was there for a day. I mean, longer than a day, but like this was a flash crash that lasted 2 weeks below 21. It spent 2 weeks, not even 2 weeks below 21. So again, as far as the Q4 equivalent, right? Does it touch 21? Does it touch 22? Sure. For a week or two, maybe. But where does it trade at? Right? GameStop is post Q3 numbers is really trading at 23, right? Most of post Q3, it's like to stay above 23. For this first month, it dipped below, and then it's been staying consistently above since then. That 23 basically becomes 24, 25 post Q4. I don't think we see a crash all the way to 20. And if we do, I think that means that the launch is imminent. It's pretty exciting stuff. We'll get deeper into earnings projections here in the coming weeks. But wanted to give you a little something to think about this weekend. And honestly, just a fun and resilient week. Pressure building. My opinion is that we see earnings first, then we see vote on Cohen's compensation, then we see acquisition announcement. But if we invert that and it's the reverse order, that sounds great to me too. There's also the flyer of when does um, DFV make a return? I think we all think he'll do something eventually. I think surely after the vote. That to me has to be after the vote, which makes me think the acquisition has to be after the vote too. I think it's earnings, then vote, then acquisition, and DFV on either before or after acquisition. I don't know. Not that him himself matters that much, but it does create some technical momentum, some little FOMO money flying into the stock, which you gotta love. You gotta love. Time and pressure, baby. All right, that's all I got for y'all today. I will see you in the next one. See ya.